All right, guys, we're back for another episode of the Mortgage Show. It's been a while. We usually do it every month. It's been like 6 weeks since we do it, so Beds, it's good to be back.
Definitely good to be back. Why are we slackers right now?
We're grinding, man. It's summertime. We're enjoying some golf, a little pickleball. We're doing loans, so weeks go by.
You got to add the boat for me.
Yes, I'm
Do
glad to
you
see you
miss?
enjoying it.
Do you miss the boat?
I did yesterday when I was at the beach last night. It was 7 o'clock. The water looked like bath water, and it would have been nice to be cruising around out there in Saco Bay.
There's nothing better for me than being on the boat. Now that I got the new pup, the pup's pretty chill on the boat. Just pup in tow, looking at the water, listening to some music.
Love it, dude. Glad you've been enjoying it, man. It's been a good summer so far, but that's really what it is. Just, I think we've both been pretty busy. So I'm glad we got a chance to find some time and put another podcast out there.
It's time. So, what are we going to talk about today, buddy?
Well, I think today, I don't know, news has been kind of light. Like, as far as like new products coming out, really big news, nothing too earth shattering has come out. I mean, there's a little bit of news and some numbers I can share in a second. Can let you chime in. Federal Reserve has a meeting right now. They're going to be announcing the results of that in about 15 minutes. So by the time this comes out, that information will be out there. So we can chat about that. But if you're up for it, I'm hoping to do a recap of some loans that we've closed year to date. Now that we're in the halfway point of the year, just kind of talk about some of the highlights, give some people ideas on things that we've been doing that's a little bit different than a lot of other places, see how we work through problems, just share some stories if you're up for it.
I like stories. I have plenty of them, so let's do it.
Okay, cool. So, do you want to talk about some news stuff first?
Yeah, let's do it.
And then just kind of tell me what you think about this stuff. It's going to be things that we've talked about for a while. I saw that. I think this is our 20th episode of the podcast. So we've talked about a lot of things, and I feel like it's the same story when it comes to rates and loan numbers and all that stuff. So here's the first one. Mortgage demand hit the lowest level since May, which is not saying much considering it's 2 months ago, but mortgage applications fell 3.8% last week. And we don't even notice that sort of stuff in our business from week to week, but obviously loan applications aren't up for whatever reason. Wouldn't you agree?
It's definitely down. I'm noticing the numbers are down a little bit on my end. And
Uh-huh.
actually, I don't think that's a good thing considering it's typically the best time of the year to buy is right now. The
Yep.
most activity usually happens right now. So I don't like that number being down. Randy, I ran into an investor downstairs in the cafe. You know him also. And I just wanted to get his perspective on what he thought about the market because he has a bunch of buildings and he's actually thinking about peeling off a couple of his buildings just to sort of mitigate some thoughts in his mind about maybe what cash flow is going to look like in the short term,
Mhm.
what the market looks like in the short term. And I kind of commented, I know I'm going off here, but I have been wrong on every prediction for the last 5 years, which has been really pathetic on my end because I've been in this for over 20 years. It's been so unusual the way that things are going. It's not a bad thing. It's just I've missed the mark on a lot.
It's hard, dude. Like, I've sold a couple of properties a few years ago thinking that that was the right thing to do, peak of the market, let's get some profit now. Dude, market kept going. So it's hard to say what's going to happen if that person does decide to liquidate. I kind of feel like whatever I want to do is the wrong choice. So I just kind of sit tight, but I get the thought.
Is that Macy barking in the background?
Yes. And then this is also me texting Tara to say, can you take care of her? So pretty brutal. But
Listen, the new dog at our house, Lucy did not bark for like 3 years.
yeah,
And then somebody would come in the house, she'd lose her mind, she'd settle down. This dog has such a personality. The second she gets up, she's vocal. I wish I knew what she was saying because I would communicate with her immediately to get her to stop barking.
yes. Macy, our dog, who's 2 years old, is the perfect dog in every single way except for her barking. She loses her freaking mind. And we have people upstairs doing some work too, so that does not help. But yeah, she's losing it up there. All hell's breaking loose. So hopefully Tara's got it under control. Seems a little bit better now.
Hey,
Um, what?
one more quick thing is our new dog broke her leg. So she's been in a splint scenario for 4 weeks. She finally has it off. So she's like anything that you can imagine that's been like shut down for 4 weeks. There's so much goddamn energy coming out of
Yeah,
that dog. I don't know what to do with it.
it's a red flag. Red flag, dude, that your dog broke her leg so
No.
quickly. What are you doing?
I mean, listen, the dog's name is Tatum. She hurt the exact leg that Jason Tatum hurt. It's like,
You better make sure she's okay. I don't want her being like a voodoo doll kind of thing for Tatum's recovery.
I know. So anyhow, we just took a walk right down the park. Where are we? What did we do?
Okay. So next thing to mention is kind of building off of what I said. Loan apps down 3.8%, but purchase applications are down 6% this week, although they're 17% higher than a year ago, which is interesting, So again, it's hard to judge a 6% drop in purchases, but it is interesting that they are higher this year than they were last year, which I definitely feel personally. But again, my business, your business isn't an indication of the market as a whole, but it's just interesting number.
It's nice because it ultimately tells you that we have a little bit more inventory for buyers to go after. So even though we're down right now year over year, that number does not surprise me. That's a good number.
So refinance apps fell 1% for the week. And I don't know how they get to the overall 3.8% or what the mix is there, but refinance apps dropped 1% this week, and they're 30% higher than the same week last year, which makes sense. Rates are definitely lower, but I'm not in the point where I'm refinancing so many people that I've done loans for in the past 3 or 4 years. I think a lot of people are still holding out for rates to go even lower. So it is interesting to think that rates dropped to 6.875 from 7.25, and a bunch of people are refinancing. But I guess when you take a look at the whole country as a whole, then I guess, more people are probably refinancing than previously. So it makes sense.
Noticing a little bit of like people are willing to let go of that low interest rate they got in 2020 because they have to do some debt consolidation. It's people are starting to get up there with some debt. So I've had some of it recently. Divorce situations are the other scenario that sort of pushes that. Man, I can't help but think once interest rates go down a point from here, it's gonna be insane for us.
It's gonna be awesome. And we've been there before. I look forward to those days. I think it's going to be insane. My fear is that people won't know when to pull the trigger. Because I had some people, rates actually got as low as 6% at one point last fall. And I had some people that didn't pull the trigger and they wanted more. So yes, rates are going to come down. Yes, we're going to have an opportunity to refinance people, but I wonder how long people sit on the fence when rates do come down, just hoping that they go down further. That will be interesting to see. Hard to tell.
Isn't it interesting though from our seat because it's like where do we put our energy when we're helping people? Because you can tell some of the temperatures of the conversations that I had last year were like, yeah, we'll entertain it, but you could tell they were still rate sensitive, and it's like everybody always thinks it's going to go down. I it just reinforces the thought in my mind that there's never like this stable area for us when we're doing this job.
Mhm. Oh, not at all. And it could change in a moment's notice, too. So it is interesting. 30-year mortgage rates barely moved week over week, slipping from 6.84% to 6.83%. So basically flat. And huge asterisk on that number is that not all interest rates are 6.84, 83. That's an average. Some people, if you have very good credit and big down payments and certain type of loans, it could be lower than that. If your credit's more average to low or different type of programs, it could be higher than that. So just know that that's an average. Doesn't mean that anyone that comes over to us is going to get a 6.83% mortgage. It does not work that way.
It does not.
Nope.
Nope.
Let's see. Activity for conventional FHA and VA loans all declined despite homes for sale and slower home price growth. So government loans, a little bit down. And those are all those loans are the main types of loans that we do. I don't even know what that means. Beyond that, Fed's rate announcements coming up in a little bit. So all expectations are that they do not cut rates, but it is becoming more likely that they cut rates moving forward at some point, September, October, which would be interesting.
I referenced the conversation downstairs with the investor. It makes me want to tell you about random text messages that I get from Uncle Tony with like that random area of economic data. And the ones that he always nudges me on is like, what are delinquencies on consumer debt? So that's credit card, car loans, PCLs. The data that he continues to share with me suggests that a lot of people are delinquent right now. Like
Mm-hmm.
the numbers of delinquencies have gone up, and then recently with some of the late payment scenarios on mortgages, those are creeping up a little bit. So it's like, does ultimately that data suggest on our side with our mortgage applications that people are starting to swim in it a little bit?
Mm-hmm.
The debt is starting to crush a decent amount of this. Yeah, I It's hard. I guess you always know what's going on while you're in it, while the data shows you, but leading up to it right now, it's like some of the stuff that I'm reading and some of the stuff coming my way is suggesting that the consumer is weakening.
Yeah. And then there's a big jobs report on Friday, which is always telling, and definitely moves the market a lot of times just as much as a Fed rate announcement. So we'll see what happens in a couple days on that. You know, bad job reports are typically good for mortgage rates. So
We have, geez, 2, 4, 6, 8, 10, 11 reports on Thursday, and yeah, the jobs report on Friday. So Thursday and Friday could be big days.
yeah, good to know. So we'll be watching all that stuff. We'll share anything that's super important. But that's all the mortgage news right now, unless there's anything else that you want to chat about news
That's it,
wise.
buddy.
Do you want me to build a little campfire here? We can tell some stories.
Yeah, let's do it.
Would you like to go first, Bids? Again, we're recapping loans that we've had, unique aspects to them, the story, how we got through problems, anything that's worth sharing with anyone that might be listening.
Yeah, so the structure of this really is probably a little bit drama laden for us, that area where it gives us a super amount of anxiety when we're trying to sleep at night, but ultimately we pull through and make these loans happen. So batting leadoff, I'll talk about the rent comp schedule inside of appraisal reports. One of the major things that you need to pay attention to when you're doing an FHA purchase for a borrower that's doing owner occupancy is that, and this is on 3 or 4 units,
Yeah.
you have to add up the gross market rents that show up in that rent comp schedule in the appraisal. You lop off 25%. The net of that needs to be greater than the proposed payment. So,
Which is
I,
hard, which can be very challenging with these prices out there.
and I think too is like one of the things that I do, and I'm sure you do it also, is like there's a due diligence in my communication with the consumer and the real estate agents of like, what do you think the rent comps are on this property? Before we're writing an offer on FHA, we're probably going to want to calculate that to see if we have a decent shot at it.
Mhm.
And I felt like we did in this transaction. And man, that rent comp schedule came in, I think it was $800 or $900 lighter than what I needed. And so what do you do in that case? So ultimately, guys, this means the mortgage did not work. It will not go any further. Application is denied. All of the drama that's involved with everything I just said happens. So we rebutted it. The real estate agent gave me some decent comps. We went on rental.com. We went to a couple other sites and got rent comps, and we submitted a rebuttal with the appraiser. And this was fantastic. It's like a very like hard communication process waiting for the results of that. A
Mhm.
few days later, he only changed his numbers by like $200.
And it killed the deal.
But so here's the only ace in the hole. And this is one of these things I would guess from CMG's standpoint where it's like we don't want to lose a customer, we don't want to upset the real estate agents, the whole like feel part of the process.
Mhm.
So I went to Scott, who's now retired. Scott was pretty dope. I'm gonna miss that guy.
Happy
Miss
retirement, Scott.
Yeah, happy retirement, Scott. So I don't know. I asked the big guys that make decisions on if we could give a loan away, which meant can we reduce the interest rate enough to make this transaction happen where the principal, interest, taxes, and insurance were less than the net of that rent comp schedule? And the answer was yes.
Mhm.
Like, as far as the business decision is concerned, excellent one for us to get the loan done. On the profitability side of this, I bet we made $5 on this loan. So ultimately, we ended up closing the loan. But it was a week of just like misery as far as, what are we going to do? Is this gonna work? It affected another
Mhm.
party. You know how this goes. So that's my story to bat lead off.
Brutal, brutal. But it does show that there's usually a way to make it happen. Like it's just like it might be third or fourth or fifth option. Like the 10th option for you is going to them with your tail between your legs and saying, "Hey, can we give a loan for free? Make no money as a company." Just to make the debt to income ratio work, and them saying yes. So, but a lot of times there is a path forward. Knock on wood, I'm totally jinxing us right now, but nice job on getting that one done.
Thank you. Appreciate it.
So I don't have such a long story for this one or just a dramatic story, but this is just an example of a situation I think it's worth sharing. But I have a borrower that currently lives in Mass and is relocating up to northern Maine or kind of mid coast Maine and buying a retirement home. So he has Social Security income, he has a very small pension, and that's all his income, right? As a retirement person. So I think it was like $3,500 a month in Social Security, a couple $100 in some pension, wants to buy a home when he already owns a home, small payment, but already owns a home. We both know that, $3,900 a month worth of income is not enough to buy a home in this market. Would you agree? I mean, it's tough.
Yeah, I mean, yeah, absolutely.
It's like less than 50 grand a year. So, but what he did have was a few $1,000,000 in an IRA, which was great. I mean, he's in really good financial position. So he had a few $1,000,000. So you can determine an income stream off of a retirement asset like that. You just take off 75% of that number to account for taxes. You have to account a little bit for the down payment. But when it was all said and done, I could generate an income stream of like $6,300 that we could add to his Social Security and his pension. And that now made the numbers work. And it was awesome. Super easy loan to do. We're on the verge of closing. I think we're closing end of next week. So, people should know that it's not just about employment income, Social Security income, things like that. If you have a bunch of money saved, we can draw an income stream off that. And he didn't even have to touch the money. It's just a calculation at that point based on how much money he has in that IRA. So super easy process for him. He's pumped. So it's been a good transaction.
Hey, good job. So we call that asset depletion. That's actually one of the ones that I was going to bring up to you because I had one fall on my lap that two separate places couldn't do. I get the application. The guy's 65 years old, has a bunch of retirement assets, Social Security, small pension. But I think you mentioned a couple $1,000,000. This person was under $1,000,000, but yeah, it was whatever the market amount was. You take off down payment, closing costs, lop off 25%, divide it by the term of the mortgage, and that creates a monthly amount. So yeah, that was actually a couple of months ago. So it's funny that we had the same scenario. Those are sneaky good.
They are absolutely sneaky good. And usually it's people that are well qualified too, like they probably have good credit. They've done well for themselves. It's just a matter of they don't have the type of income they used to have. So once you can generate that income stream from that, the rest of the pieces are probably pretty strong. So I don't know how many people know about that. So
that's a sneaky one. So one that I want to bring up is we've talked about escrowing for repairs on government loans. So what we'll talk about FHA specifically. I had a rather large escrowing for paint happen recently. So FHA's, and I kind of learned this actually when I dug into the guides a little bit more. I've always known it as $10,000 you can escrow at closing for cosmetic things. So this is not functional things. You can never do that, but like painting, minor things like that. So I get this paint quote and it's $19,000. And I'm like, now I go into a panic because I'm like, oh my God, what am I going to do with this? We can only escrow up to $10,000, which is 1.5 times. So actually that means a $6,500 quote is $10,000. So you are allowed to, as a borrower, escrow or pay down that escrow by 50% at the closing. So the borrower was able to put in half of that money at the closing where we held it, which basically brought that escrow below $10,000, which was really cool. Yeah, it was really cool. Yep.
Yeah, I can imagine getting that invoice and being like, great. What am I going to do now? But again, found a solution. There usually is one someplace.
So you go through that, right? And then I found out that the paint was old enough to be in the lead paint area. So,
sweet.
So naturally the first quote came from somebody that's not capable of handling lead abatement. So we had to go down and find another quote.
It makes me laugh hearing you talk about that, just because it's like we do a lot for our borrowers, and we got to figure out things and problems, and it's just like, a lot of things like that are out of our control. But I think a lot of people think it is very much in our control. How that stuff plays out. So it's just funny. Do you want me to talk about the next one?
Yeah. What do you got?
So got some borrowers that closed earlier this year, and I feel like I may have talked about this on the pod before, but dual income household, previously had very strong income, but both of them lost their jobs, and they were under contract for new construction for a number of months. So this is like, okay, they lost their jobs during the construction process. We had a loan application going for a while. It's like, oh man, what do we do? So the wife got a commission type job that we could not use her income. So she went and got another one, but the income was not usable. So it's like, oh man. Husband ended up going and get a job, got pretty good pay, but not as much as he was making before. So it was like, we have to make this work on his pay alone because we can't use her. His pay is lower than it's like, what are we going to do? So he was a veteran. So what we did is we did a VA loan, and the debt to income ratio ended up being like 75%.
Yeah.
So a lot of people don't realize that debt to income ratio is just like what your debts are per month, including the mortgage, as a percentage of what your monthly income is. A lot of times you're not going to really go above 50% with all your debts, and usually like 35 or 40% on the mortgage payment as a percentage of your income. People don't realize that VA doesn't have that limit. Like it's still going to work, and there's some things that have to happen behind the scenes. But I got this one to approve in the system at 75%. Got an exception from CMG, and we still closed it, and they were pumped. And they're doing great. So it was an oh crap moment for a second when they lost their jobs that we still were able to make happen.
I like the feeling, but I also dislike the feeling of running a VA loan, knowing that you have those liberties to go over 50%, but how far is it actually going to go?
Mm-hmm.
You know what I mean? So like I did also have one recently. I closed it at I think it was a 67.5 back end.
Yeah.
Um, and oh my God, when I got that contract, because what happened is here's your pre-approval amount. Here is the scenario that I approved it under as far as escrow for taxes and insurance. This property was in a town where the taxes were like 3 times the amount. When I got that contract and I looked up the taxes, I was like, oh my God, this is not going to go well.
But
But,
hey, we
and
made it.
have you had that happen to you? Absolutely, right?
Yeah, of course, a bunch of times. So there's things like that happen all the time. So it's nice that we were able to do that. And earlier in my career, I don't know that I would have been able to just pull that off. I don't know. I just kind of feel like maybe earlier in my career when you're overwhelmed and there's so many things coming at you, just like, oh man, like how am I going to make this happen? And then it just all falls apart. But like, I was glad we were able to keep it together and get them on the closing table. No delay, no anything. Just kind of pivoted during the transaction, and they got a great rate, and it was fine. So it worked out good. What else you got? Anything else you want me to keep going?
Yeah, go ahead. I'll let you have another one.
So I got another borrower that, God, I feel like I might have talked about this on the podcast, but relocating from Vermont and closing up in the Bangor area, they had to sell their house to buy. They're going to put a huge down payment when it was all said and done, a few $100,000 from that home sale in Vermont. Well, a week before our closing in Bangor, and we had been clear to close for weeks, like very smooth transaction, like we hit it out of the park. Everyone's super happy. But a week before, we find out the buyer that was buying their house is like that transaction's falling apart. So, and we need $300,000 to make this happen. Because we didn't have to count his mortgage payment on all of a sudden, like we don't have the $300,000. We have to factor in the mortgage payment. What are we going to do? And basically in like 2 days time, we sorted out a gift from a family member for the down payment to get him at least the 5%. He wasn't going to put the big down payment, but we did the minimum down, and we found someone to rent out his house for an amount that made it work, that basically covered that mortgage payment. So we basically got everything in line in the matter of 2 days, and we still closed on time. Super stressful, like very, very stressful. But the team rallied. Underwriting was like on top of things, telling us what we needed to do to make it work. Emily was on fire. The borrower themselves were great in finding that tenant. And we took a really tough transaction a week out and still made it work. And then here we are a few months later. And I believe he's already done a recast where he did ultimately sell that property to the person that ended up renting it. And then we got a lump sum of money, applied it to the mortgage, did a recast where they recalculate the payment based on a large principal pay down. So like just a great job scrambling by our team in a not ideal situation that's out of all of our control.
I love to hear that. Wow, that's actually pretty amazing.
Yeah, dude, close on time. It was great. So I mean, that was stressful, but it was very, very stressful.
So you and I could go back and forth all day with scenarios. A little part of me wonders from your end, how do you manage the stress, Randy, when you're in? So I know for us, it's miserable when the stress hits. You know what I mean? But how do you shield your family from that? How do you keep your emotions together just to keep your parties in line? Like, how does that look for you?
Yeah, dude, I don't know, man. I think it's just something that comes with time. You just kind of learn to leave work at work and then focus on home when you're there. I mean, I am not perfect. I'm sure you're not perfect. There are things that happen that kind of spill over to home life, but I think it's gotten a lot better over the 17 years I've been in business. I think a lot of it has to do with setting expectations. Like, you know, when we identify a problem, we just like communicate it effectively, say what's going on. This is what we need to have happen. There's like, I'm not banking on something happening that's a Hail Mary that only I know about and I have to think about how I'm going to explain it if it doesn't work out. It's like just kind of lay it all out there for people so people know what's going on, and then I can sleep fine at nighttime. So,
Yeah, I always jokingly use like the Belichickian scenario. Like I always say that I Belichick things.
yeah.
I really did learn a lot from the guy from his press conferences of sort of how to move on to the next player, the next thought. I really try to move my mind when I'm in these like crisis areas so I don't ruin my night at home, but also I don't come across like I'm losing my foundation with the parties that need to hear from me, and I need to be the person that drives the bus and makes sure everybody leaves my conversation feeling okay about things. But dude, you're really right though with the you cannot. I never feel comfortable whatsoever submitting a loan if I feel like it's a Hail Mary myself. I almost like pre-qualify outside of our process with
Yeah.
myself. Like if I was giving this person this amount of money, do I feel like they have the repayability to pay me back on it? So
Yeah.
that's always worked well for me, but man, sometimes that stress can stack.
You know, like I feel like I do a decent enough job identifying all the things that could go wrong in a transaction and I don't want to say over disclose, but just kind of like make people aware of things, and we have a very tight process. So like I do feel good about things, but even now and then like things sneak up on you. So like to be completely honest, I had one of those things happen the other day where I don't know how it is for you operating in Clear. We've only been at CMG for 15 months, so software stuff is still a little bit tricky for me. But when I run credit now, I don't see the credit report unless I go to Birchwood to look at the actual credit report, or unless you do things different than me. But like back at Norcom, we'd run credit, the thing would pop up. We're looking at the PDF of the actual report. But
Yeah.
over here, the software that I use, like it just puts the credit scores in. I see what they are. I see what the debts are, but I don't see some of the context around things. Well, I pre-qualified someone where the spouse had a bankruptcy and I didn't see the bankruptcy in our software, right? Like it doesn't show up. Like you have to dig for that stuff. And when I went to run AUS, it came back, and I was telling them, I'm like, honestly, like, been here 15 months, and we've done a lot of loans since then. Like, I don't know that I've had someone that has had a bankruptcy. So, anyways, like they got to the point that they thought their options were one thing, and then I found out about this bankruptcy, which I should have known before. And I had so much freaking anxiety about this. It brought me back to like 10 years ago times where I don't think I usually get as stressed out as I was about this one thing. Ultimately, we can make the numbers work in one of the parties' names, but for a freaking couple hours, I was losing my mind. And it sucks. And it still sneaks up on you, man. And it probably will for the rest of our careers as long as we're in this.
It's interesting because it's like as long as you have been in it, the amount of reps that you do, you always have something that catches you, so you remember that for the next scenario. But actually, after all these loans, after all this time, there is stuff that gets me too. Stuff like that gets me every now and again. It's like even with my escrow issue that I was talking about earlier, it's like that's such a simple thing to know, but until I run into it, why would I have known a borrower can pay down his escrow to get it below that threshold at the closing? You know?
You can't know that. You can't possibly know that, dude. Like that's stuff that's not in licensing tests. That's not stuff that you read about. It's stuff that you don't know until you go through it. That's just the reality of the situation.
Okay, somebody approached me for a construction loan and they do have a bankruptcy on there.
Mhm.
So my autopilot with conventional guides, I had to think for a second because I haven't seen a bankruptcy in a little while also.
Yeah, I mean, honestly, I can't think of the last time I had a borrower that had one.
So I hop on the Google machine immediately, like conventional guides come up. It's easy to do that, but it is a construction product. So now I'm sitting there thinking, well, maybe our construction guidelines have something different in it. This is going to tie into it's impossible for us to know everything. When I opened up that construction guideline, dude, it took me at least 20 minutes thumbing through everything to read that fine little print that says we follow conventional guidelines on bankruptcy season.
Yeah,
But what if we didn't? What if I
yeah.
autopiloted it and then all of a sudden I got caught on it? So
Yep.
yeah, it's impossible for us to know.
Yeah, but like you said, remember that for next time. And I'm honestly glad you mentioned that because I'll remember that for next time too. It makes sense that we would mirror conventional guidelines for that though, because you'd hate to do a construction loan for someone that can't refinance it into something conventional just because of a bankruptcy. So it kind of makes sense. I have one more transaction, which I think you're going to like this one.
All right, let's do it.
This is a new one, and then I'm good to go. Had a borrower that these are main state housing type borrowers. Their income is below the limits. Like this loan makes the most sense. First time home buyer, you can get a credit for closing costs, great rate, all that stuff. Except they want to get a gift for 20% from their family. Fortunately for them, they were able to get that gift. And my mind went to, oh no, that's not doable because borrowers can't have 20% down and do a main state housing RD loan, right? That's probably what you would think. So I'm like, how are we going to do this? I'm talking to Christine Hager. She's awesome. I'm like freaking texting while I'm on the run. And, my texts aren't even probably making sense to her. I'm like, how can we do this? Can we do 19% down? And she's like, they just can't have 20% available to them, 20% plus closing costs. So I'm like, oh, we'll just do like 19%. We'll make this happen, right? Stupid thought. Come to find out, there is a 20% down main state housing loan with no PMI. And it's basically a conventional main state housing loan for people that have 20% down. So 5.95% rate, $5,000 credit towards closing costs. We don't have to worry about them showing too much money. They're just going to get the gift, and it's freaking perfect for them. So anyways, they're under contract. The loan's submitted. They were working with another local bank, and the local bank, they told the local bank about this, and the guy tried to retain the deal, which I don't blame the borrowers for continuing to talk to them. But the guy tried to talk them into staying with the bank, and he's like, main state housing is not the right program for you. He's like, I hate it when local mortgage people, try to do what pads their pockets and not what's best for the customers and all this stuff. I'm like, listen, guys, I know that that's what he said. I know that's what he thinks, but I have to be honest with you. I was not aware that this program even existed until we started talking. This bank doesn't even do main state housing. There's no way that this guy knows that this program even exists. So you go tell him what I'm telling you right now, like the things you're getting and what this is. And like they ended up coming back to me the next day. He just said, yeah, he didn't know that existed. And, he's nothing he can do to compete with that. So it was kind of funny.
Can I ask you a question?
Yeah.
If I know you, I know at some point you're going to have a lunch with this guy. You guys are going to get along, and he's going to refer every one of those scenarios to you moving forward.
This guy is a pretty good competitor. I have a lot of agents that like use him for like portfolio stuff too. I don't know him on a lunch level, so maybe we will, and maybe we'll joke about it someday. But it was just, I honestly don't even know if he knew it was me that was also talking to these people, or if he was just talking about in general mortgage people that did that. But it's just funny what people do to kind of save deals. And I was happy that I was able to retain this one because we ultimately had the better program. And this 20% no MI main state housing loan is definitely something to keep in mind.
Nice. Good job. I guess one last one for me is like I continue to do these like non-QM loans. I don't know how I've found the majority of them. Like I have a DSCR coming that's going to close in a couple of days, and simply all that is like somebody's going to purchase a property. We're going to add up the rent comp schedule when the appraisal comes in, and if that's greater than the PITI, that the catch on it is 20% down. Borrower always has to have 20% down. And dude, this has been such a great experience because the borrowers are actually like cash people. They own a food truck, and the amount of cash that's deposited in their account, it's like almost foreign for me for that to be something that's documentable, because cash, for everything that we've learned since we've been in the business, doesn't work at all. But
Yep.
yeah, that one's closing next week, and I'm pretty excited about it actually, because these are the type of clients that are going to come back and buy another one and buy another one, because it's like it's amazing to me how much money's in food, in a
Love
food, in a successful food truck.
So we're going to open a food truck, TB3 food truck.
Let's go. Diversify. We should. Let's go. Who runs
Those
that?
are all these stories, man. I'm done for story time. I think that's like probably a good place to wrap up the podcast. But hopefully, for anyone that's still listening, that just gives them an idea of just the different ways we navigate through deals. Obviously, we do a bunch of easy transactions that don't have problems from beginning to end, but we are very capable at this point of doing tough transactions and finding solutions and making it happen. So, nice job on your deals.
You too. Before we leave them, did the Fed announce? You see it anywhere?
It's 208 right now, and headline, no headlines yet. So
No.
So we will see, but expectation is that they kind of keep. Okay, yeah. So it just says S&P 500 maintains gains as the Fed decision. As people await that, they await the decision. So nothing yet.
Well, I guess this wraps it up.
It's a good time to wrap it up, dude. But great conversation. Thank you guys to anyone that's listening. We'll do it again next month.
See you guys.